It has been a crazy 24-hour period in markets, and in this video, I'm going to break it down, make it easier to understand, and actually help you find some potential trading opportunities in this wild market. Let's jump in. So we've got the S&P 500 trading lower here into the New York session open. We'll see if that lasts. But of course, this is off of the reaction to yesterday's NVIDIA earnings, where we have seen a wild ride here. We saw a big drop and then rallied all the way back, and now we're seeing some sell-off. Let's talk about what's going on with NVIDIA. Let's also talk a little bit about metals, which are making a push higher here that we definitely need to discuss. The dollar index is also trailing lower here, and we did get some economic data points this morning. Noticeably, we did get a better than expected GDP number this morning, which is the second consecutive better than expected growth in the US economy. This is a really good sign and shows that things are still holding up decently, but what does that do to rate cut probabilities? If the economy is holding up, will the Fed feel less likely to cut rates? Let's look. Well, we can see that for the September meeting, we are still about an 85% chance of seeing a rate cut in September. So it's a pretty good chance that we are going to get one cut at least this year. But let's go out further and see what the probabilities are for the 10th of December, which is the last Fed meeting of the year. And what we can see here is something kind of interesting. So we're currently here, which the probabilities of no cuts for the rest of this year are very unlikely at just 1%. But what I find interesting is the probabilities for one cut are actually pretty low. The probabilities for two seem to be the consensus. 2 rate cuts is now what seems to be expected. But a week ago, the probabilities were between 2 and 3. And so these two numbers were kind of in line with each other. And so we have seen a slight shift in favor of less rate cuts. Perhaps just 2 rate cuts are on the table. Of course, it largely comes down to what we get with NFP, CPI, and the list of these data points. Of course, the best way to track this stuff is to keep an eye on the US economic heat map, which shows you GDP numbers, retail sales numbers, PMIs, CPI, PPI, PCE. It tracks all this stuff and generates bullish and bearish outlook for the dollar and stocks, keeping this very easy to understand and high level without having an economics degree to understand what's happening in the economy. This tool is built for traders to implement fundamentals into their analysis without super complex understanding of everything. And I've got something exciting to show you. If you're a fan of the Edge Finder but don't yet have a copy, we just made the top setups page free for the rest of this week. If you click the link in the description down below, you can sign up to get free access to the Edge Finder free version. Like I said, the top setups page, the tool that essentially shows you our overall algorithmic output for everything that we track, silver, gold, currencies. If you want to try this out for free this week, now's the best time to do so. It is temporarily unlocked. At the end of this week, this will go back to premium only, as it is kind of the prime piece of action that we have in our software tool, but we're making it free so that people can try it out. So if you want to try the tool, the link is in the description below. And my goodness, did we have a reversal here this morning. We can see the stock market, of course, moved lower with NVIDIA overnight, and then bounced back, rallied all the way to the New York Open, and then they just got sold into. Crazy stuff going on. What happened with NVIDIA earnings? Well, long story short, they beat earnings. So shouldn't the stock go up? Well, yes, but here's the challenge. NVIDIA shares are very popular. Everyone wants a piece of the action. That makes the demand for the stock very high and the share price, float higher and get very expensive relative to the underlying company. And so unsurprisingly, the stock has been so popular because it keeps beating its earnings. When I say beating its earnings, by the way, for the non-stock traders, analysts forecast what a stock is likely to put up in terms of its earnings report. Just like a GDP stat or a CPI, right? These economic calendar events, stocks have earnings, and earnings reports for NVIDIA have consistently beat expectations. But yesterday we got a beat that was much less than prior beats. And again, this is just how crazy and popular the stock is that it can beat those numbers, but it didn't beat enough to really impress investors, and so people sold the stock. By the way, we're looking at the earnings report tracker, which is available in this new Stockbox tool. You can find out more information about the Stockbox on our website, a1trading.com. And just a quick plug on this, we just finished the top stocks indicator, which is of course like the top setups for Edge Finder, but for stocks. Super exciting. And if you want some information, head over to our website. NVIDIA CEO Jensen Huang says that bringing Blackwell AI chips to China is a real possibility. Of course, that may have been why after the stock price initially sold off, we saw some bounce back from the low. lows. But again, this stock is so popular and the whole market is watching this. And so without some ginormous beat, again, the stock has doubled. So the expectations are just really high on it. And in my opinion, has room to pull back and potentially pull back the broader market too, which is built heavily off of the idea of a tech rally because of AI. When we look at the indices, I would not be surprised if we did pull back to like 63.60 or even a pullback to 62.40, especially given the economic circumstance that we've just been discussing. Long story short, US stocks are getting a bearish view in terms of the economic data because we have some cooling economic reads like PMI data, retail sales, and the NFP report at the same time that we have inflation that remains pretty sticky. The producer price index jumped, as well as the PCE number, which we get fresh data on that tomorrow, so stay tuned on that. But generally speaking, we have a mixed or even bearish outlook, mixed for the dollar and bearish straight up for stocks, at least on the economic data front. And this is why, again, I think the Fed is suggesting it might be time to do some rate cuts because you've got economic data slowing as well as inflation still sticky. So that's a very challenging circumstance or stagflation type environment that is difficult for stocks. But of course, it's only difficult for stocks because it's difficult for the Fed to know the correct move. If inflation is high and jobs data is slowing, what does the Fed do? Do they hike rates? Do they hold rates? Or do they cut them? It's challenging. Today's video is sponsored by a long-term friend of the channel, Audacity Capital. Audacity Capital offers instant funding or two-step evaluation offers for people who are looking to get funded. They offer up to a 90% profit share, and now they're offering DX Trade, which is another popular trading platform. And they've been in the game since 2012. That means they were established 13 years ago, which is longer than I've been trading. And an exciting announcement is that Audacity Capital is back for US traders. If you are looking to trade with Audacity Capital, check them out, see if they're right for you. Make sure to use your due diligence. And for a limited time, the promo code TraderNick10 will get you 10% off their ability challenge. So check out Audacity Capital. We'll leave a link in the description down below. And don't forget to use that promo code for 10% off. Now back to the video. The stock market obviously wants rate cuts. Lower borrowing costs, good for consumers, good for businesses that need to borrow money, and it helps to hit their bottom line in a positive way. But if inflation is still sticky, that is where the Fed kind of has to hold back from cutting rates too many times because cutting rates can also lead to more inflation. That is why, to me, the risk to reward on stocks remains a little bit unattractive, at least for now. I would either need to see pullbacks in order to potentially buy the stock market or for the data to start coming in a more optimistic or promising way. Now, if you watched my video yesterday, then you know where I'm headed with this. My favorite interest is, of course, right now, the metals. And I went long silver and it turned into a pretty quick turnaround trade. This is a really, I wish I had more trades that looked like this, but we are looking really good on metals. And I think that this is one of my better calls that I've had in the last few months. Metals looked really good. And again, this was a straight up setup on the Edge Finder. You can see the silver, very bullish reading that we got under the trade ideas segment. You can see we're getting a plus 13 score, very bullish reading on the Edge Finder. And so yesterday, when we pulled back on the 4-hour chart to that 38.2% retracement in tandem with the top setups alert, I went long and things look pretty good so far. Here's my SLV trade, which is what I personally traded. We're sitting on a P&L of about $4,600 in floated profits, and I did trail my stop loss or just trim it slightly to reduce potential risk on this trade. We're looking really good here, and depending on what happens today, I may actually lock in a stop further into profit and make sure that this is a profitable position for me no matter what happens next. And of course, I shared this trade inside of our VIP Discord, and I've got something cool to tell you about. The VIP membership, where you can see all the trade signals that I share on metals, indices, currencies, stocks and options, all of it is now currently, for a very limited time, 40% off. If you want to get notified anytime I take a position, as well as Marco from our live streams, we'll show a picture of Marco in case you don't know who I'm talking about. We share all of our trades inside of the VIP Discord. Like this silver trade, which I took yesterday, as well as several Forex trades that I'm currently trading as well. All of this is currently 40% off for a very limited flash sale time period. So if you'd like to take advantage of the discount before that ends and get a huge discount on memberships, click the first link in the description down below to speak to our support team. Let them know that you heard about the flash sale and that you're interested in getting 40% off. For a limited time, you can get that sale discount just by sending us a direct message on our website using the first link in the description below. And if you're a lifetime member with us, then you get access to our trade tracker, which shows you pretty much everything I'm trading in my portfolios and if you become a lifetime member, you'll get access to the A1 trade tracker, where you can see myself and Marco's trades and all of the positions that we're in across our portfolios, updated every 15 minutes. You also get access to our fundamental analysis guides that we have for members, the technical analysis guides, risk management. Well, it's coming soon. Stay tuned on it. Our getting funded guides, and of course, my trading strategy in detail. So don't miss it. For a very limited time, 40% off can be found in the description below. So this stagflation risk that we're looking at with metals is why I am so bullish on both gold and silver. But why did I pick silver over gold? Well, if we take a look at gold on the daily chart, this is just ugly. Look at the back and forth here. But if we look at silver, there's a different perspective. We have a chart that is trending from the bottom left to the top right, and that is generally speaking where I prefer to go, is charts that have some momentum and to respect price. Price seems to be cleaner on silver, so I'm trading silver. If gold breaks out and looks great, I'll trade gold, as long as the, of course, fundamentals align with the technicals. Silver right now, though, is a great example of a situation in which the fundamentals align with the technicals for me, and so that means trade on. To simplify this process, I pretty much rely each day on what the top setups indicator is showing me, which scans sentiment, technicals, and fundamentals or economic data. And interestingly, seasonality favors silver upside in this month. We can see actually the last 4 months have been spot on with seasonality. What this is showing you here is that the blue bar here in seasonality is showing you the 10-year historical average performance of silver during each one of these months, right? May, June, July, all these months expected to be positive. And the dotted line shows you or represents what the actual performance this year has been. And so you can see we've been pretty spot on just using the seasonality indicator within the Edge Finder as well. Of course, seasonality falls under the technical score. And so with silver and gold both getting bullish seasonality readings, that adds overall to the total score. That is just one of the tools that the Edge Finder is utilizing to build a bias around a particular asset. Let's also talk about the dollar, because we do have some really interesting bearish reads on the Edge Finder against the dollar. In fact, if you just filter right now for category and go major currency pairs, which is all the dollar crosses, look at this. We have a really polarizing view on the US dollar. The Aussie dollar getting a bullish reading, the Kiwi dollar, Euro dollar, pound dollar. Remember, these are all bearish dollar ideas. Bullish Aussie, bullish Kiwi, bullish Euro, bullish pound, bearish the dollar against all. And of course, the dollar Swiss and dollar yen, both getting very bearish readings as well. And I'm also bullish Euro dollar, which this trade is also working out nicely here. I am sitting on a nice little gain of somewhere in the neighborhood of, let's call it, I don't know, 75 pips or so. I'm looking for more upside on this. I do think that we are headed back towards those highs. And even if we make a move here up into this range, I would look to probably lock in some profits and start the trade sequence again. And currencies are an interesting thing. They typically chop around. And so that is why I'm pretty quick to take profits and very slow to enter an idea with very small positioning. Generally, I find that the biggest issue that people have with currencies is their sizing, right? People are trying to bet that the euro is going to do something very quickly, or tight stop, big position, where I've really found a lot more success in currency world just by trading really small and building positions in and out, scaling in, scaling out, accumulating, distributing, whatever you want to call it. Essentially, the idea being I've bought a little euro, I had willingness to buy more euro if it came down here. Size is small enough that I don't really care if it moves against me, and it's a dollar cost averaging style. If you want to watch more videos on my dollar cost averaging approach to Forex, if you're a Forex trader, check out this video in the top right hand of the screen. This might be useful to you if you want to explore more about how I personally trade currencies. And I do trade them differently than I trade things like gold, silver, oil, the US stock market, etc. But generally speaking, dollar crosses look bearish for the dollar and strong for other currencies. You can see the pound dollar also finding support around this 1.3430 level. Dollar yen also rolling over a little bit more. Still a choppy pair though, not really a big interest for me trading that one. Dollar Swiss still respecting this 8100 level. Dollar CAD is pulling back. I think the technicals look bullish here, so I'd probably stay away from this one personally. And Kiwi dollar still finding the low here. It looks like it may be making that move that we thought about. I decided to go with Euro dollar instead of Kiwi dollar, but Kiwi dollar, Aussie dollar, these still look good in my opinion for some upside swings. Here's a look at the dollar index rolling over here today and finding resistance, respecting it very nicely around the 98.75 area of resistance on the daily chart. I do think that what you want to look for is if you're a dollar bear, let's see if we can get a break through these lows. If that happens, I do think we have path of least resistance down to 97.25 and perhaps even back down to that 96.50 area, that previous low. which would of course bode well for both my currency trades and the silver trade. It is not coincidental that I think when you pull up the top setups page, you've got a pretty dollar bearish unison move, right? So the fundamentals are favoring right now some softness in the dollar. Again, this could change. And of course, when I'm trading, I'm not tied to one idea, and holding on to dear life, right? I'm trading these things. So I like the dollar bearish setup right now. And if that changes next week, then so be it. But for now, I'm just trading what I'm seeing on the top setups page. Preliminary GDP came in at 3.3%. That is better than expected there. Nice strong beat there. And unemployment claims came pretty much in line at 229,000, though technically that is slightly lower than expected. So good economic reads here this morning. That is good for, we would imagine, the dollar. Did that push silver and gold down a little bit? I would imagine. Dollar's up just a little bit. Not a huge move. Russell is slightly lower off the idea that if the economy is okay and jobs look okay, the Fed may feel less pressed to cut interest rates. Remember that Russell is really sensitive to interest rates. So is the dollar. So dollar up, Russell down, gold little soft off of that. S&P 500 mixed, makes sense. GDP is always a little tricky with stocks. You want strong growth, but if you get too much strong growth, they won't cut rates. And then the stock market's like, hey, we want rate cuts. And they start crying. And okay, so there's the silver trade. Little bit of a muted pullback here in response to that. NASDAQ is looking okay here. Here's your 15-minute chart. An hour to go until the New York session opens up. S&P 500, little mixed here. Russell 2000, a little muted. Let's take a look at the VIX. VIX is lower, of course, following that NVIDIA earnings. Not a big move on NVIDIA earnings, so VIX is chilling out a little bit here. You also are getting the sell-off in the news as that volatility kind of gets sucked out of the market. Gold actually making a slight move lower here on the 15-minute chart. Same thing with silver, pulling back just a little bit here. Oil prices muted. Bitcoin trying to stage a comeback, it looks like. You've had a pretty sizable pullback on Bitcoin here recently. Topped out around 120-something thousand, dropped all the way back down in just a few days to 109. Just shows you the volatility that is in Bitcoin. Absolutely crazy. Bitcoin came down to this level of support, really clean turnaround at that 110 level. Interesting stuff there. But yes, I want to loop back here and talk a little bit about the silver trade. Why am I in the silver trade? How am I managing it? So I took this trade yesterday, which, again, the entry here ended up being pretty picture perfect. We came down to this level of support. Price came down, wicked into this area, bounced off, came back one more time, and I bought right there. And we turned around. We are back to the highs. I'm very curious to see how we react here. I have my stop loss. I do not have a take profit on this trade. So if you're new to the channel, the way I manage trades is I trail stops. So, or at least my momentum trading style. I have a couple different strategies that I use for options. I trade Forex and I trade, commodities and indices as well. And for commodities and indices, what I typically will do with a trade is I will have a stop loss and I will usually trail it if we get some sort of move. Now, what I'm looking for personally on silver here is to see if we can actually break and stay above this area. At that point, and I think, again, I could be wrong, but so far I'm right. We'll see if I still am right. I think that the silver market, the gold market, metals in general have more room to expand higher. And so if I think that the silver market is going to move higher, I don't want to tighten my stop here. I don't want to put my stop right here. I'm not fearful at whatsoever of what could happen in this trade. Some might say, well, Nick, what if this thing drops all the way down and tags you out for a loss? Then so be it. I've been trading for almost 10 years. I can take some heartache. Don't you even worry about it. It happens sometimes, actually. And it could happen on this trade. You could get a sharp reversal and all the profits that I've made could go away. They're all unrealized profits. Why? Why would I not just lock something in? Well, because there's always a price to pay in trading. If I trail this stop and I put it right here, what if it just does this? Boop, boop, right? Did it really show me signs that the market was reversing hardcore just because it pulled back a little bit? No, markets don't move in one direction. They move in waves, they have pullbacks, they have breakouts. I think the general path of silver is higher. I don't want to get in the way of general path. What does general path mean? General path means I think it's going to move higher, but I don't know exactly every single candle what it's going to print. I just think, not based on my emotions, but based on my system. Silver, which was a trade setup that popped in the edge finder yesterday, should continue higher. I think that the direction is higher. I agree with this consensus from the edge finder, showing me that sentiment, technical, and economic data generally agree that the path of least resistance is potentially a weaker dollar and stronger gold and silver. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.